The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, we're back, folks, and I have an announcement to make. We are going to be looking at these next 2 days very closely, Wednesday and Thursday. If you'll remember, back on February 4th, we were making a major bottom on the Bradley Index. That's when we had the last major, what we call a mini-minor major correction in the Dow Jones when it got down to I think right around 16,000, and since that time we've rallied, well over 500 points. And at that point, we were watching it very, very closely. The reason for watching it very closely is because if you go back to 2007, it was one of my first shows. I believe it was my first or second show with Tom O'Brien. It was August the 15th, and we were making a major low at that point. The Dow was down 400 points that day. The Russell was unchanged on the day, and NASDAQ was down just a little bit. It was one of the few days that Skype was out, and the market bottomed on that day and then went straight up into October the 10th, making a new high. That was 56 days, I believe, and then from there it rolled over. Well, February 4th, if you add 56 days to where we are, guess what, boys and girls? We are right here, right now. So it reminds me of that song written by Paul Anka for Mr. Frank Sinatra about now the time is near and I have faced the final curtain, because if the stock market is up on Friday, I'm moving to the 200 and 400-day moving average system that I've been working on for the past 20 minutes. This is it, boys and girls. If we close higher on Friday, I have to go out to the desert and bury all my books, because it will tell us that something's different this time for sure, which I really don't think it is, in fact, but trying to make it as entertaining as possible here, which is not very easy to do when you've got the comedian power of somebody like George Bush. Anyway, I posted the first chart into Tiger TV today. It's a Dow Jones Transportation Average that goes back from 1896 to 2014, and it basically gives us a picture of a huge ABCD three-drive pattern going back, well over 17 years, and that's pretty much what we're doing. So it's a huge ABCD pattern. But if you look at this, you'll get a really good idea. When you look at the 87 crash, you'll see what a really insignificant thing it was when you look at the charts on a long-term basis. But folks, I can remember that 87 crash, and it was far, far from being insignificant. And I think the only way they're ever going to teach any of these folks that are using the margin a lesson is going to have something like that happen again. This week, it was also reported that the margin debt also increased another, I think, 1.4%, which was a tenth of a percent higher than the last increase, and also the available buying power of the people that are, leveraging stocks has dropped to an all-time record low. So we're way past the levels of 1929 and 2000 and 2007, but nothing has really stopped it. Now, to me, it's the next 2 days. It's today, tomorrow, and Friday. And if we close up Friday, then and close into new high ground, I will certainly have to review this. Now, we have not made a new high in the Dow Jones Industrial Average, but I really don't think that means anything. We're making a retracement move in the NASDAQ from the high. We got up to the 61% retracement in the NASDAQ after the big break that the NASDAQ had. So maybe there's some divergence going on at that level. But we do have the transportation, extending up to a 1.618 of the last minor high that we had here that's included on this chart that we see that goes back 116 years. So I really think we're over something really ominous here. I've been saying that for weeks, and like I say, eventually I'll be right, but whether it'll be in my lifetime or not, I'm not sure. So we'll have to just have to wait and see what's going to happen. On a personal note, I happened to be watching television last night. I like to watch NCIS because Mark Harmon is the star of the show, and I knew his father, Tom Harmon, and it was he was playing at Mark was playing at UCLA. He was a quarterback there, and Tom Harmon was one of the customers that we had at Drexel Burnham. Really a gentleman. He was a Heisman Trophy winner at Michigan, and just a really nice fellow. But the thing that was really funny last night is one of the actors that was there was Stuart Margolin, who was one of my customers at Drexel. He played the part of Angel on the Rockford Files, and I got to know him pretty well. And he was on the show. He had a nice little speaking part and everything. But boy, it sure reminded me of going out there to the place where they were shooting the Rockford Files, and having tacos at the where they did the catering stuff. It was really a lot of fun back in those days. So since I don't know anything about the markets, what I'm trying to do is to give you some other ideas of things that we keep an eye on here in the market as we go through. Now, I wanted to share some charts with you, and the first one I want to show you here should give every bull a lot of confidence, and every bear should be scared to death, because the VIX has told us that there is absolutely no fear in the market now. We've broken down below any support that we had. We've taken out the support from February. We've the support from March. The only thing that we have going on a technical basis here is a 3-drive pattern that is coming in today based on those other lows that we've had from February to March, and then also to where we are now. As a matter of fact, what I should do here is I'll just, if I'm capable of changing this just a tiny little bit, I'll draw the cycles in and I'll put them in here so you can, if I can just get them to be just a little bit closer here. We'll be able to see that the cycle should be coming in somewhere around this time where we are, within a day or two of this level, if that's the case. That's why I'm saying this is such an important day, because we are 56 days from the low we made in February, and that's the same situation that we had in 2007 when we topped on October the 10th. And October the 10th was a new moon, but our new moon came in on the 31st, so we're 2 days past that new moon, and that's about the maximum that you're ever going to get. So whether that's going to be the case or not, I don't know. All I know is if it closes higher Friday, this thing could have a blow-off move. We could have a tremendous blow-off move without any trouble at all. And I'll show you why, and that's quite simple to look at here, is that if we look at the major New York Stock Exchange Index, you'll see that we're into new high grounds without any trouble at all. We're almost at the 1.27 expansion here. Now, we have not made new highs in the S&P 500 index or the S&P futures. They're telling us that on CNBC, but that is not the case. What they're telling us is they have closing highs, but these are not highs that we look at when we're watching these markets, and that's why it's very, very important, because what they tell us on CNBC is not true. I mean, they're saying it's making new highs. They don't tell you that it's new closing highs. They're just saying that it's new highs, and that is not true. The high in the S&P was 1888, and we've only been as high as 1883.5 today so far. So that's what we're watching. When we take a look at the long-term chart on the oh dear, I hope I can get this done without any trouble at all. I don't think I can. Yes, I can. Just give me a second here. There we go. And we'll put the thing in here going back. We still have these patterns forming on the long-term charts, going back on the weekly, on the New York Stock Exchange Index. These are the same things. We're just having an extension in here in the New York Stock Exchange Index. And folks, like I say, if this thing is up Friday, I'm taking a long, long vacation, because I'll let Basil guide you through this maze of market things, because it'll be doing things like I haven't seen before. This is very similar to what we had in 1999 and 2000, where the Dow topped in January, and then the NASDAQ, topped in March with all the internet stocks that were going on. We're having similar types things, but the one that happened in 2000 was a once in a generation, because they had some of these stocks that didn't even have any sales and were going crazy to the upside. Well, we're having the same thing now too with things like Bitcoin, which really is insignificant for what we do. But there's others like ICPT. It was up 150 points one day, and look at Las Vegas Sands. It's up 6,000% from the bottom in 2009 when it got down to $1 a share. So these are these are big patterns, and I've been saying this all along. These are huge patterns, and they are harder to time, because you can look at a yearly pattern, you get off by 3 or 4 months, and you'll still be right. But if you're short during that whole time, you'll get absolutely massacred. Frankly, I did some the 180 puts back about 3 weeks ago that looked like they have about a 0 chance of coming out with anything, but I had a very small risk in that, and that's what I wanted to take at that time, and it worked out to be what I expected. So I'll be ready again here on Thursday or Friday, because if the market does turn down either Thursday or Friday, I will be looking to look at the May puts, and actually I'll be doing the futures, because they're so fairly priced that we'll be able to look at it. We've had a question about the new thing that's out by Michael Lewis, where he's talking about the game is rigged. I don't believe that, folks. I mean, I know that the flash trading and the stuff is very important and stuff, but it doesn't affect what we do. And the reason why I know that is this has been going on for a long time, and none of the numbers or none of the patterns or any of the things, the profitability and everything that we've been looking at has changed one bit. Now, it could change for some people, but they're only talking about infinitesimal amounts of money, because they're only making 2 and 3 cents on some of these things. And a person that wants to buy 100,000 shares of IBM, he wants to get it at a certain price and to just leave the order in until he gets filled there. That's the bottom line. They can front run it all they want, but he'll still get filled eventually. So I believe Michael Lewis is a really smart guy. You can't fault him for his big short that he had in the excuse me one second. The big short he had when he was short the leveraged CDOs and stuff back in the top of 2008. But now I just don't believe this high frequency trading affects us very much. I think it brings a lot of volatility into the market, but that's about it. Okay, we'll take a break here. We got the Dow up 17, the S&P up 5.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to bring up a chart just to show you the difference of what is happening in the market here, because I'm going to post a chart here to show you the Dow Jones Transportation Index, and to show you on top of that, you're going to see on the blue line, the line chart, you're going to see the NASDAQ, and the NASDAQ, as you can see, is making 3 lower tops at a 61% retracement. The Dow Jones Transportation is very, very close to a 1.618 expansion. And so, this is a really big divergence. And remember, it was the NASDAQ that led us up. That's the one that took us all the way up with all the, the biotech stocks and all the things that were happening, with that. So, you've got to, keep in mind that these are different markets. You've got to be able to look at them separately and, make your decisions on that. Because we've got stocks like Apple and Amazon and other stocks, even Google and Tesla and some of the others that have been the front runners have actually, weakened a little bit here. And, of course, the IBB, the biotech index, has been, relatively weak on a relative basis, and we should take a look at that. We'll look at that in just a second, but I wanted to show you the NASDAQ here because it really highlights where we are here with the 61% retracement. We are, we went up there today at 36.63. Went just a point or two higher than that, and we've been trading under it, most of the day. But again, this is still early in the day, and this could easily accelerate like it did yesterday. The thing moved 70 points in one day, which was one of the largest days that it's had, in quite some time, which means that it could still even go higher yet. The E-mini has a very good chance of the E-mini S&P has a good chance of making the ABCD pattern that would form around the 1889 level. I'll put that here, and we'll just take a quick look at that, and you'll see what I'm talking about here. Get the move it over just a little bit, and we'll be able to see it here. But it's completing an ABCD pattern, which would take us into new high ground, because the old high was 1887.50, and it wouldn't be unusual for this ABCD to complete at that 1888 level. So that's why today is such a critical level, is because we are 56 days off of that February 3rd low, and I know without any question, if we take out that February low, that February 4th low that we had, actually came in on the 5th, if that happens, we are going to look at something very similar to 2008, in my opinion, because that's what happened on August the 15th. We had that major cycle form there. We had the big rally that lasted 56 days, making new highs, and then from there, the market, rolled over. One more comment on Michael Lewis's book. He's a very bright guy. I recommend you getting the book, but I really don't think that, high-frequency trading affects what we do. And the reason why I say that is I'm watching about 14 markets every day, and I'm watching them hit these fib numbers, like they're preordained to get there. I'm watching 618 and 786 and 1.27 and everything, and they hit spot on. And I know there's not enough people out there looking at them to make those numbers hold the way they do. It's natural law of the market. That's the bottom line of what we're looking at. I mean, look at the Nasdaq. I mean, when it made its low back on the 17th and made the other low just recently on the 27th, it was a perfect 61% retracement of the low from March 17th. So these numbers are, to me, they're etched in stone, and I don't think there's much anybody can do about it when you're watching them. So just keep that in mind. But we're looking at a 2-day window here, Thursday and Friday, possibly today, but Thursday and Friday at the very latest. We close really strong this Friday, then I will introduce my 400-day, 200-day, 50-day oscillating moving average stochastic MACD program on my show on Monday. I've been working on it very vigorously here for the last 30 or 40 seconds, and I'm almost finished with it, so we'll see what happens if we get it done here. All right, now, I wanted to mention to you, I've talked about the VIX. I wanted to make sure I did that. I did the Dow Jones. Oh, the Bradley model. Folks asked me about the Bradley model in here. Folks, the Bradley model since February 4th has not been active at all. I mean, we've got something major coming, but it's on the 21st of April. We got the Dow up 20, the Nasdaq up 5, the S&P up 5, and gold is up about $12.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've had a question about the Bradley model and the fact that it doesn't do what it's supposed to do some of the time. Well, that's true. The Bradley dates themselves are very, very powerful dates. That's the question. Sometimes the trend can get off by a little bit, but on February 4th, actually on December 31st, it called the actual high in the Dow Jones, which has not been taken out as of yet. I mean, it probably will be soon, but hasn't done it yet. And then we came down into February 4th, which was the major low, and then it had that huge rally that's been going on for, like we said, 56 calendar days, so that it does have some good things to work with it. The problem is that it is far from perfect, and it's just a way of looking at things that are giving you a probability in a certain way, and so we'll see what happens. Just got the greatest news in the whole world just a few seconds ago, boys and girls. Thank you very much. Anyway, I posted into the Tiger TV here in the den here about the that's a little inside joke at Tiger Financial News Network, folks. We have a great family of friends in there, and including our fearless leader Tom O'Brien and his son Tommy and everybody else there. So it's really a fun thing to do. Anyway, back to the story. We talked this about several times in the last week or so about silver and gold, and we posted the chart of gold, and we posted the chart of silver, and we posted the chart The daily chart on silver showing that March 31st it was supposed to get down to $19.70 an ounce. That's where time and price squared out, and that's exactly what happened. It got down to a low of $19.63, I think, per ounce, 7 cents under the low, and now it's trading at $20.04. So it's had a very good move here. Gold has also bottomed down near the 1277 level and has also had a good move. And I think this is being shown on the XAU because we came down to a 61% retracement on the XAU last week, and now we're having a pretty good move to the upside also. So that's pretty much what we're looking at. That's the basis of what we're looking at here. And anyway, this is what we're watching here when we're looking at these things. So keep an idea that the things are starting to heat up in the gold and silver market. So we'll have to wait and see how they work. Tomorrow on the commodity show, I'm going to have really trying to get Rich Anderson on because we've had incredible moves in live hogs and a few other commodities, and we wanted to talk about those because it's really, really a big thing to see that these things are actually, maybe reaching some types of major spots where they're going to run into some resistance in some of these commodities. Okay, we'll get back to the gold and silver. The first move in silver, if we can get silver above 20.50 per ounce, and so it really makes it a good thing to do it. My lovely wife Sarah was here giving me a little nudge. Okay. Anyway, we want to take a look now at the Dow Jones along with the Bradley model here. I'm hoping I can get this put up without too much trouble. Oh no! Don't do this to me. Oh, this is not good. Hold on, I'm going to have to do it without the Bradley model. I just wanted to show you where we are. Oh, shucks. Boy, there's nothing more frustrating for me than computers. They just do not like me. Okay, here we go. We're going to have this up here in just a second. And I'm going to do my best here to overlay the Bradley on this, so bear with me 1 second. And I'll try to sing a few songs, which, no, that won't work, and I won't tell a few jokes because that won't work. And now I really did it. Hold on, I lost my, there it is. Okay, let me move it over just a little bit so we can see where we are. Now I'm going to overlay the Bradley model on this, and we'll be able to see what it looks like, and hopefully they give it a better idea that we can show you these dates when they do hit. All I do know is that when we hit the date, oh dear, now what has happened here? Ah, boy, I got to invert it just a second because I put the inversion in, and that's the wrong thing to do. All right, now we're ready. Now we should come in here, and you'll see the Bradley model will come in here on the green line here. And you'll be able to see it without too much trouble, I believe. And you'll notice that it does a really good job of hitting the high that we had back on December 31st, and then we came down to a perfect 61% retracement down on February the 3rd. That was exactly 61% retracement of the low that we had made, going back into December. And so now what we're either getting ready to make another huge ABCD to the upside here, or this is going to be a double top in the Dow Jones. And as you can see, we are coming into this time frame very shortly. In the next couple of weeks, you're going to run into the mother of all astrological dates, which is the 21st and 22nd of April. And that is going to be the weekend of the following Easter, so I really expect something huge to happen in the world. It'll be on every paper in the world and every news item. It'll be far more publicized than the losing of flight number 370, the Malaysian flight 370. It will be much bigger than that. I feel very, very strongly about that. This is an event that will be in the history books. This will be like the fall of the Berlin Wall, or something of that magnitude, something like the tsunami earthquake, or the earthquake in Thailand in December 22nd of 2004. By the way, we've had three major earthquakes just recently. We had two in California. They were only 5s, but they had a 8.2 earthquake in Chile yesterday that is going to have tsunamis. They've already have a tsunami warning on it because it's deep out into the ocean, and so the waves are going to come up pretty heavily to watch this. And this is all related to the new moon, and it's a big one. So we'll see if it does have any effect on some of these markets. But right now it has had zero effect, which doesn't surprise me because your greatest frustrations in this business are ones where you have your expectations are not fulfilled. So try not to think about something happening, and you're much better off and wait to see if it does happen. That much I can assure you. We're not very far away from a new high in the Dow Jones. That came in at 16,583. So we're only 30 points away on the Dow, folks. That is absolutely nothing. That's just a bidding up of a few stocks, like Microsoft or high-priced stocks. You'd want something like J.P. Morgan or Caterpillar, or the higher-priced stocks, and those are the ones that you'd want to be looking to buy. So, like I mentioned here, I think we're over these next 2 days is going to tell the story, because if we close strong on Friday, this thing could actually blow off and go a lot higher. I know how it'll end, but it's going higher than where I thought it would possibly be. Now, I wanted to share something with you that you folks probably don't watch too much, and that is the German market, the DAX index. And I wanted to give you an idea of what that looks like, because it's got a beautiful pattern on the long-term dailies. It's just it's really quite amazing here. I'll post it in here so you can take a look at it. This is the DAX going back several months, back into December. And as you can see, we're in our third lower high right now, and we've had equal moves. We had one in December, we had another one in February, and we've had another one just completing now. And they're all the first ones were exactly 13 days. And this is where we are. We're in the 13th day of this one now, so we have a lot of symmetry coming into the German market. The reason why I bring this up is the fact that it is also the fourth largest economy in the world, and it is also making what we call the 1-3-5 pattern, where you have the two lower highs, and they're coming in at a 786 retracement. So that tells us that we're getting something pretty close to something big should be happening. That's what we're looking at. So that's what we've covered now in the stock market. We've covered the gold and the silver. I think the next thing we should take a look at is to take a look at the foreign currency, and the best way to do that, of course, is to take a look at the euro. And the euro has had a nice little rally for a few days here, doing virtually nothing except completing an oversold situation. But when you look at the euro on a longer time frame, you can just see recently. We just made a beautiful 3 drive to a top pattern back on the 15th of March, right before the St. Patrick's Day holiday, and now we're backing off quite a bit. And if you take a look at the euro on a longer term, and we'll look at the weekly here because it's very, very important, because we just completed a 3 drive to a top pattern on the weekly basis, coming in at a beautiful 61% retracement of the high we made in 2011. So this is telling us that the U.S. dollar is actually, gaining some strength here. So this is going to be interesting, because if we should happen to get above 140 in the euro over some type of an announcement or a war or whatever it could be, you'd be looking at the euro to have one heck of a move. But frankly, right now, the euro has been in a downtrend for 5 years. from 2008, 2009, 2011, 2013. All of those had lower highs. And so this market has been in a bear market for a long time, and we just completed a 3-drive pattern on the weekly, which gave a very nice sell signal up at the 140 level. So, and we're a couple hundred pips below that right now. We're about 250 pips below it. So that's acting pretty nicely as far as it goes, on a technical basis. So the only one that's not capitulating is the old stock market, but it's just biding its time. I think it's waiting for the old cowboy to move on to the next pasture, and then it will finally roll over, and we'll see what it does. But it certainly is a thing to watch when these people are so bullish everything. It really is really amazing of what's going to happen, and we'll see what's going on. Someone asked a question about global warming. Folks, I know about as much about global warming as Al Gore does, believe me. They talk about global warming. I want you to explain that to somebody that lives in the western the Midwest or the East. Explain to me about global warming this year. I believe that parts of Niagara Falls actually froze, and I know Lake Michigan was the most it's ever been frozen in over 100 years. So global warming didn't help the folks in the East. In Philadelphia, where our grandkids live, they had more snow than ever recorded, even back in the time of Benjamin Franklin. So this is something that you got to keep in mind. I know it's a long-term thing, and I'm sure there is something there, but we'll have to wait and see. I've asked someone asked another question to talk a little bit more about the April 21st, April 22nd. Folks, this is a combination of how we weight the markets. In other words, we take the Mercury, Venus, Mars, and Jupiter, and we've looked at the way of weighting it. This was done by my co-author, Shane Schmolian, and on our new book that's going to be coming out on astrology, hopefully in a few months, through John Wiley. And it's got some incredible statistics in there about the lunar phenomenon in stocks, about how it works with new moons and full moons. It's really an amazing thing, but is far from perfect. But the one thing that we do see, and that is that this thing that we're having on April 21st, 22nd is going to be really monumental if we're correct. And if nothing happens, maybe we'll delay the book coming out. No, that won't happen. But that'll just mean it didn't work. But there'll be something. I mean, believe me, that's got to be something big that time. I don't know what it'll be, but it could be something. Just maybe Jay Leno will come back and take over the Tonight Show, or no? I mean, that would be a big. Well, it's nothing like that. This is going to be something that'll be geopolitical or geophysical, like a major earthquake or a tsunami or something of major proportions that will hit all the newspapers and all the reporting places, and you'll see that it's going to be just a real monster type thing. I don't know. Yeah, it could be my brain freezing over. That might be a good thing. Okay, we're going to take a break here with the Dow up about 20, NASDAQ and S&P still up about 5.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I've had a request to repeat what I said about the 56 days that we have going up from February the 5th to where we are now, that it is very similar, not very similar, it's exactly similar to what happened on August 15th of 2007 into October 10th of 2007, which was the high, which was within 1 day of the new moon on October the 10th. And here we have 56 days going up from February 5th coming into the new moon, which was on the 31st. And we're into the third day of that, which is the longest that you can have. Well, you can go 4 days, but that's really rare. That's why I'm saying that Friday, if the market's up, all this stuff is for naught and it doesn't mean anything. But if it does turn down either today or tomorrow, then we'll see. But if it closes strong on Friday, none of this means anything. And so you get back to the 200, 450-day moving average crossover system would be what I would be looking at. Now, that's with tongue-in-cheek, folks, and I just bit my tongue. Okay, now I wanted to show here the emerging markets because we've had some talk about that on the CNBC and also Bloomberg, the fact that they've had a really nice 10% rally off of the bottom. But as you can see, this market has been in a downtrend since, it's been in a downtrend for many, many years. But over the past 2 years, you can see we've had lower tops all the way through, and now we are completing a Gartley pattern today, and it is right at the spot. So, we'll be able to, we'll still be able to see if that's going to be the case. So anyway, that's what we're looking at, and I think that we're going to find out here in the next day or so what's going to be happening here, because if it does turn down, it's going to be for quite a while, but this is it. I mean, like I said, there is no tomorrow. Well, there is a tomorrow. There's tomorrow, and that's it, Thursday. Because if it closes up Friday, there's something. All of this is wrong. I have to take the books out and bury them in the desert, because this is what it should be doing, and it's all lined up. And whether it does it or not, remains to be seen. I have one more question about that April 21st, 22nd. I don't know what's going to happen. All I know is it's going to be something big that will be on every major news cast in the world, not just us, everywhere. Even places where they hardly have any radios or TV will be hearing about it. That's how big it's going to be, in my opinion. I don't say things like that very often. The last time I said something like that was back in November of 1989, when we had the fall of the Berlin Wall. Didn't do anything to the market, but that's pretty much what what we're looking at here. So we'll see if that's going to be the case or not. But it should be something very, very big. On tomorrow's commodity show, we're certainly going to talk about hogs and cattle and the grains, because we've had big moves in grains, and we're coming into the growing season. They're already planting corn, and they'll be planting beans in another 3 or 4 weeks. And so there's going to be some big moves, because we've had tremendous moves with big crops, which telling us that there's a lot of demand out there for our products. There must be places in the world that are having very, very bad problems, and from that we'll know whether we're going to get any worse or any better. But by tomorrow we'll have a little bit more information on what's happening with the stock market, of course, and then by Friday we'll absolutely know for sure, where we're stand, and we'll see if that's it. We've had 2 earthquakes in California, one right by my daughter, a 5.1, and they had another one in Southern California at 5.1 that knocked some things off the shelves and stuff like that. But the 8.2 earthquake in Chile was a big one. This is it, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.